Okay, what we're going to do is sketch out exactly what financial planning looks like, the concept I touched on in the webinar presentation. Here's what we do. And by the way, before we start, I should just say that about 14 years ago, we brought in an external consultant called Paul Armson, who's from the Midlands, and Paul came and spent a whole week with us. Throughout that week, we were able to conceptualise basically all of our planning. We actually borrowed the money to cover his consultancy fees too, but they've paid us back 100 times over since. So let me now sketch out exactly how we plan with people. We will work with you on the basis that you are a financial bucket. It seems a bit strange initially, but stay with me. And in your bucket, you'll have what we call ready, realisable assets, and that's your cash, that's your savings, that's the money you can kind of go and get your hands on today if you needed to access it, and that's great. Now that's not the only thing going on with your bucket, because every month or every week you'll have what we call current inflows. And your current inflows at the moment might be a salary for yourself, it might be a salary for your partner, it could be dividend income, and there might be other things as well on top that you receive, and they are going into your bucket on a monthly basis. They might not always be there, and at some point in the future you may also replace your current inflows with future inflows. Touch on those at the moment. Now that's all very liquid. You can get it whenever you need it. But that's not the only thing going on with people, generally speaking, and their financial buckets. Now, most people also have assets and investments. Now, in the terms of assets, one of the biggest assets we have tends to be our house, our property. And whilst it's an asset, it can also be a liability. It has a mortgage on it, it has maintenance costs that need to be expended from time to time, and that's great, and it's an asset and it's part of your asset and liability statement, your balance sheet if you will, but you can't quite access the money in it just quite as easily as you can with this stuff here in your bucket, so it sits outside. In a similar way, many of you will have pensions, and your pensions, again, whilst they're an asset, they're not perhaps available to you in the same way that your readily realisable assets and cash is here. Okay, now for many of you there will also be a business, which I always draw as a factory for some reason, it's a habit, and the business there also has a value in it, but you can't quite maybe perhaps always access the value in your business from a capital point of view. There may of course be dividends coming in from the business into your bucket on a monthly basis, and if so, great. And they're the kind of dynamics. You've got this capital that sits inside your bucket, and you've got assets that sit outside your bucket. And of course, in the future, you might turn a tap on in this pension, and you might drip some income into your bucket, and you may also take, by way of an example, 25%, 1/4 of that pension, and that can also come into your bucket too as a future inflow. And that's what we were talking about here with future inflows. You may also downsize at some point, move house, downsize, and if you did that, some of that capital from your property might also find its way into your bucket too. And you might sell your business, or you might just take increased dividends, or you might do some form of earn-out, and one way or another you'll pass some more direct capital directly into more readily realisable money down here. On that basis, you would think, well, looks pretty good. Our bucket is just going to fill up. But buckets don't just fill up, do they? Because over here, we have a tap. And rather than putting money into the bucket, as these do here, this tap is taken out of the bucket. And this is, for example, the cost of our lifestyle today. This is our lifestyle tap. This is our bills. This is our food and drink. This is our holidays. This is the kids, the grandkids. It's all of today's expenses. It's everything that we do today, entertainment, and it's the cost of our lifestyle today. Now there'll come a point in the future when this tap really takes shape and it starts to develop arms and legs and grow at an even faster rate than it is at the moment. And it's the tap you'll turn on where you decide to slow down and start to do all the things that you want to do with your life when you retire. This is your retirement tap, lifestyle tap 2, and it's kind of this one but in a bit of overdrive. And yes, maybe the mortgage may have been paid off by this stage, and maybe the kids aren't as financially dependent anymore. Subjective always, of course, and many people will tell you that the kids become more expensive as they get older. But whatever the case, this is the tap you'll turn on at retirement, the second phase of life tap, as it were. And, you know, in my experience, it can be this tap multiplied by 2. And why shouldn't it be? This is the tap you turn on when, you know, you go to Europe more, you holiday more, you travel more, and so on and so forth. But there'll come a stage, there'll come a time where you turn that second tap off too. And when you do turn this tap off, you're likely to turn on this third and final tap of your life, which is a little bit smaller, because this is the tap you turn on when you can't go trekking around Europe and holidaying 3 and 4 times a year and doing all of those great things and jumping out of planes and so on and so forth. And then ultimately, we're all heading for our afterlife. I can tell you that there's only one of 2 things that will happen to you and your financial bucket. You will either go through your life here and here and here, and what's coming into the bucket might not be sufficient to drive those lifestyle taps. So in other words, the bucket might run down. It might just run out. And if it was to run down, that would be bad, because it would mean that you'd have to turn these taps down, and possibly in the worst case scenario, even off altogether, and just have a very, very basic existence. But there's another thing that can happen. You might do very well and the bucket might fill up. And if the bucket does fill up, it could overflow. And if the bucket overflows and you go to your grave here with too much money in your bucket, what that would mean is there's a high chance that Mr. Inland Revenue would be receiving 40% of your entire estate over your nil rate bands, either 650,000 or $1 million if you get the residential elements. And that would be bad, because after working hard all of your life and paying tax on all of your salaries, paying tax on all of your dividends, paying tax on your business profits, and indeed everything else you've ever done with tax and tax on fuel, and kind of everything we do is taxed, isn't it? To pay 40% away to the government would be bad. But there's something much worse, and it's this. If you go to your grave with too much money in your bucket, with an overflowing bucket, what it would really mean is that you probably didn't do all of the nice and really great things that you could have done here while you had the chance. And now it's too late. You've gone to your grave with too much money in your bucket and literally no time to spend it. And the job of a proper financial planner is to do one thing really, and it's to help his or her clients make sense of what's going on with their financial bucket. It's to get a grip of all this stuff. And that's what we do. If you've enrolled on the course, we have a very useful tool to help you put all this together. We can do it on our mastermind sessions as well, but the course itself gives you this fabulous PDF handout which incorporates these taps. It helps you get to grips with what these taps look like. You're going to record today's lifestyle, you're going to record your stage 2 retirement lifestyle, and you're going to record the lifestyle tap that comes into action when you start to slow down too. And it's by working out those taps you'll find your number. And it's that number that we will look to achieve and maintain such that you can run your retirement in whatever way you want and not compromise on any of the really nice things that you plan to do. And that's the job in this lifestyle financial planning part of the programme.